there. Oh, I love this intro. No
Just for
need.
you, Amy.
Thank you, Peter. How was your day, Peter?
Good so far. I think there's going to be some good trading later today, so we'll see. But so far, so good.
Yeah, I think there will still be a lot of opportunities after.
Ooh, hi Peter.
Yeah, I missed a ton this morning, but you can only watch so many things. So
Yeah, that's true. You
what can
can.
you do, right?
Yeah. Actually, yeah, the trade I'm looking right here was called by someone in our community. Someone said that it started forming a head and shoulders pattern, and only then I noticed it. I liked the pattern there, and I took this trade. So thanks to them. I wasn't even watching it this talk today in the morning.
Yeah. Ooh, hi Peter.
Okay, perfect. Yeah, it's fine. So have a good day, Peter, and hey everyone again. Ram, make sure to send it in the off-topic chat. Guys who are new here, make sure to send your screenshots to the off-topic chat. We'll take a look at them, and as you always, I'll go through 2 trades maximum for everyone, at least for now. If we have time, I'll go back to the rest of them because people are still coming in here, and I think we'll have much more trades right there. If we have time, I'll go through my trades as well, and yeah, that'll be it. How is my day? It's good. I had 2 winning trades and I think 1 losing trade. Yeah, 2 winnings and 1 losing. And I'll go through them after that. Actually, today I didn't take parabolic reversal. It was my classic ABCD pattern and an extreme reversal pattern. Those 2 were my winners. And 1 loser, I always tell you that we should not take it when a stock is uptrending in the pre-market. Most likely it's going to open after to drop after the market open, but I still broke that rule. I took it to the long side. I exited break even, but I shouldn't have even taken it. So yeah, let's see what you did today. Let's open Epic Pen, and hi guys on YouTube. So UAL parabolic reversal. This was really good. This was really clean right there. I love it. Parabolic reversal, indicator confirmation. Stock has around $2, which is big move for this stock. And I agree. UAL, AAL, CCL, they don't move a lot, right? Sometimes they do, but $2 in one run with no pullbacks, that's too much. And you can see here UAL from 37.50 all the way to 40, and yeah, and even broke 40 a little bit. So that's more than $2 move. No, yeah, at 40. So yeah, that's $2 move with no pullbacks, and yeah, this is a huge move right there. Parabolic on the 1 minute chart. On the 1 minute chart, you see that it's not dropping down, and now it's starting to get like this, it's starting to get parabolic there. Extended from the 9 moving average on the 5 minute chart. This is the 9 moving average on the 5 minute chart. That was the current price. It was so extended from the 9 moving average on the 5 minute chart. At the daily chart, he had a resistance area. You see this area right here, it was around it. And remember guys, daily levels are not exact levels. Sometimes it could go closer to the daily level, sometimes it could bounce literally out of daily levels, similar to what we had on NKLA yesterday, and sometimes it could break it. So as long as it's around the daily level, it's good. Now let's see after that. Took an entry to the short side at 39.75, and I will zoom into the 1 minute chart after we finish right here. Wanted to get a 5 to 1, but ended up exiting at break even, which is 0R. Stock went into my direction, then it pulled back a little bit. You hesitated for 20 seconds, I think, then you got out. Should I have stuck with it? I think you should have stuck with it if you didn't get your stop loss. Now let's zoom to the 1 minute chart. Let's go first of all through the major stuff he said. Extended from the 9 and the 5, something we'll have to see. Parabolic right here, below a daily level. Once we see that, now we are paying attention to the 1 minute chart and to the 2 minute chart. The classic parabolic reversal, you would want to wait for a new 2 minute low. If you have like something so perfect like this candle, and I love this candle, this is a clear shooting star at the high of the day with no wicks below it. Once it makes a new 1 minute low, I would also take it. What don't we have in this trade to make it an A plus setup? we don't have a climactic volume, but that's totally fine. We don't have the climactic volume every time. But if there was a climactic volume, then 100% this would have been like a perfect setup. This is still a really good setup, and if I was watching it, 100% I would have taken it. So you taking it to the short side right here. Personally, I would put my stop loss somewhere a little bit above the body of this candle. If it's not hitting my original stop loss, I'm holding it. If it's hitting it, then I'm exiting. So yeah, Jabon, did it hit your maximum stop loss for this trade, or your stop loss for this trade, or it didn't? And what was your target? Where would you have partialed on this one? Your stop was half the week, so it didn't hit it. Target previous day close, which is here. So you see, I mean, eventually you would have been stopped out right here, right? So you wouldn't have partial right here. You would have stopped out there, but still, I personally would have held it through this consolidation. Once I see that it's forming an ABCD pattern right there at the half day, I might get hesitated and I might exit, but still I don't think I would have exited. I would have held it to my max loss for the trade. So your entry was amazing. The exit was early. One possible exit for me on these type of reversals, if the stock is pulling back to the 9 moving average in the 1 minute chart, starts holding it and coming back, or drops to the 9 moving average in the 2 minute chart, starts holding it and then coming back. If I see one of those two scenarios and we are having it right here, I might exit eventually at break even. But if it's going against me on the first candle after my entry, or on the second candle after my entry, I don't think I'll bail out, because these are only moves within the 1 minute candle, which is totally fine to see. Abhishek is asking, hey man, I had a question that I forwarded to Andrew, but I guess he's busy. If you are willing to share your email, I'd want to send it to you. Yes, of course. You can send me that question. I am sharing my email there. Your target was really good, I love it. And yeah, the setup was good. Unfortunately, this right here would have subbed you out, but eventually I see that it actually did work out right there. Not bad setup right there. Really good actually. So Charles, let's see what you did there. Charles traded NCLH and you took it to the long side. Was this a 5-minute open range breakout or an ABCD pattern, or you had some other thought on this? Because here I could see a 5-minute open range breakout with an ABCD pattern on the 1 minute chart. An ABCD pattern I'm not sure I would have taken, but still this is not a bad ABCD pattern on the 1 minute chart. Why is that? You are having a strong move to the upside, pulling back to view up, buying pressure weak, and then a hammer. And if I would have taken this thing to the long side on the 1 minute chart, I would have taken it after this hammer, just to make sure it's going up. I don't think I would have taken it on a new 1 minute high. Why is that? Because this is a big move to the upside, this is a parabolic drop, and I usually wait for a W shape before I take it. If there is no W shape, I'm being a little bit more patient on it. But if we look at it, this is not only an ABCD pattern, it is also an open range breakout on the 5 minute chart. So 5-minute open range breakout, close to view up, on a stock which held above view up the whole pre-market with an ABCD pattern on the 1 minute chart. This is one of the best open range breakouts there. You took it to the long side. I love how patient you were. You waited for the break, because ABCD pattern is a breakout pattern, right? Took some partial at the high or closer to the daily level, another partial there, 2 partials here. I would have made it only 1 partial, I think. More and more right there. So yeah, good job managing it. Was your stop loss below the body or below the wicks right there, Charles? Below the wicks. I personally wouldn't use the wicks. You could get some slippage if you're using it below the wicks, and if it's hitting the low of the wick, most likely it's simply going to break it one more time. So yeah, I think below the body is more than enough, but this is something for you to work on and check your journals if it's better to use the wicks as stop losses, or it's better to use the bodies as a stop loss. For me, looking at my journals, I think using the wicks is a little bit too much. If the trade is working out, most of the time it's never making it down below the bodies. Sometimes it does, and sometimes the wicks are better stop loss, but the risk to reward I'm making, eliminating those extra few cents right there, compensate for the losses I get right there. And remember, if you're tightening your stop loss, you don't go for a 2-to-1 only because you used a tight stop loss. You try to go for 3 to 1 at least. Now let's see what we had right there. It started to get toppy, right? It's parabolic reversal right there. Parabolic reversal right there. Without even looking at the 9-moving average, because it's not there. This is so clear to me that this is going parabolically to the upside. Two good looking 1 minute candles. Not a bad entry to the short side. Stop loss a little bit above the body right there. If you are patient and you are holding through consolidation, you will survive the pullback and you will make it all the way to the 9 and the 5. You see that it's starting to form sort of a descending triangle right there. Flat support right here. And it's making lower high, lower high, lower high, and then eventually it's breaking down. You could also see a head and shoulders pattern, but I don't like these head and shoulders since the head is not at the high of the day, right? It's sort of head and shoulders there, but yeah, the head is not at the high of the day, so I wouldn't really like it as head and shoulders so clear. It could be a double top, which is not bad right there. And there it's starting to change the trend, right? It's breaking this neckline right here, it's breaking this pivot point right here, it's pulling back right here to the previous support area, which is also a good thing. And you see that the trend actually has changed, so now it's not a good stock to watch or for a long side. And this high right here definitely wouldn't have been the best entry for me to take it to the long side. Why is that? As we said, it broke all the pivot points and now it's going to the upside. It going to the upside doesn't mean that it's strong. This is not an ABCD pattern. The trend has changed and it could simply be forming a reverse ABCD pattern. And this is what we should be looking at when the trend is changing. If we want to look into the long side, we want it to break the previous pivot point right here, make a higher low wave, just to show you that it's not so weak right there, and then we take it to the long side. That didn't happen. It actually broke the pivot point right there where you took it to the short side. This is a really good entry right there. I love your patience, and I see your partial. Your partial level was amazing. You see that this is the previous level we had right there. Oh my god, my line is horrible. This is the previous level we had. This is the previous low of the body we had, and you took a partial closer to that level, which is really smart. I love this partial. You don't care about the pullbacks because you know the market is trading in waves. That's really smart. And then you are taking another partial closer to the $19 round number. Really good trade management right there, and I love your two trades. I love you did nothing right there when it was choppy right there with no confirmations. So yeah, good job, Charles. Let's see your beyond trade. So you traded beyond and you took it, went for an ascending triangle breakout. It barely broke out. I see what you saw right there. So beyond holding above view up before in the pre-market, starting to move to the upside right there, selling pressure right here, selling pressure right here, a wick on the upside bigger than the wick on the bottom side, and then it's dropping down. What I love right here is that it broke the pre-market level, but it didn't break it so much. It didn't continue going lower. This is showing you that the stock is actually trending to the upside. It held it, it came back into the range, which is showing you that this stock is not so weak right there. Now looking at the bigger time frame, we can't just get an entry right there. It's just new 5-minute high, right? What's a new 5-minute high? It's almost nothing, right? We need more confirmation right there. Let's look at it from the 1-minute chart. There it is. It broke the low right here. It did two reverse hammers, which is showing you that the stock is actually so weak, but it can't break to the downside. It immediately gets bought back up on the next candle. This right here isn't a bad place to take it to the long side if you want to trade fake breakdowns. If you want to be a little bit patient, let it do whatever it does, make a pullback with a higher low, which it did right here, and then wait for your new high. You see small ascending triangle on the 1-minute chart. You are seeing a new 5-minute high on the 5-minute chart. Fake breakdown right there. Stock held in the pre-market above view up. It didn't get sold off right there. You're taking it to the long side. It's breaking view up, making a higher low wave, which is good. Breaking up one more time. Now this is a fake breakout to the long side. Reverse hammer, wicks on the upside, and then it just simply getting back below view up. It's just showing you that it's not so strong. It wasn't weak, so weak right here. It made a decent move right there, but it's not also so strong to make it back to the high of the day. So this exit was also really good right there, Charles. You didn't exit on the first view of breakdown. You gave it more time to see if it's going to work out. It didn't, and then you built on it. So yeah, good job there. Let's see what Garpit did there. Traded ENPH. Now let's see what we had on ENPH. ENPH yesterday it sold off so much, and today in the pre-market it was uptrending. At the open it was relatively strong, making higher low waves. Let me get this color to yellow. Going to the upside, doji, and pulling back, right? Doesn't get sold off. Going to the upside, breaking the high of the day, and dropping back down. Now here I don't like it so much. Why is that? Because I'm afraid it will start forming a head and shoulders pattern, right? It made it to the upside, pulled back, broke the high of the day right there, and got back into the range. Right here I am afraid it will do this, and we'll have a head and shoulders pattern. So I personally wouldn't really have taken this thing right there. On the 5-minute chart we're having one doji right there. I might have taken it to the long side after 2 dojis, because this is an ABCD pattern. It's a little bit far from the 9 moving average in the 5-minute chart, and my exception on these type of setups or an ABCD pattern is to have 2 dojis and then a new 5-minute high and put my stop loss below the wicks of the previous dojis. So this is what I think about it, but still this is not a bad one. If you look at it theoretically, this is an ABCD pattern. Moved to the upside, pulled back, held a support area right there, made a new high, which is a good entry to the long side. I personally wouldn't have taken it on this candle because it still was making lower highs right there. We want to make sure that it's going to go to the upside. Then this candle wouldn't have been a bad entry to the long side. This wouldn't have been a bad entry to the long side. Putting your stop loss somewhere in between the wicks right there, or at the low of the consolidation, which is definitely better. I think your stop loss was below the wicks right here, right? Or it could have been below that wick right there. So wherever you put it, it is still good risk to reward. You held on right there, survived the pullback. I would have taken a pullback right, a partial right here, I think, because of the fake breakout again, reverse hammer right there yesterday. Sorry, shooting star. And yesterday it was so weak, and then it's making a 1 minute close. So I think just to be safe, if this partial wasn't big, I would take another partial right here, and then not a bad partial at the daily level, which was really smart right there. I'll show you an ABCD pattern I traded today because I am sharing a lot of EMD, I think, yeah, because I'm sharing a lot of parabolic reversals. Let's go for an ABC pattern. First of all, this is a trade I shouldn't have done. Why is that? Remember, I told you, if the stock is making so strong move in the pre-market, most of the time, even if it makes a new high, it's not so strong at the open. It usually just simply sells off. And if the stock made a huge move to the upside, to take it for a trend continuation or an ABCD pattern, I want to see at least 50% retracement. 50, 60, 70 is fine, but I need to see 50% retracement. Right here, it wasn't 50%, it wasn't even 20% retracement, right? This is the pullback, sorry. Like, this is the pullback, and this is the move, right? Right here. So this is not even a 25% pullback, so that wasn't good. I look at it at the open, I saw that it was dropping down steadily, started holding this level right here, took it on a new 1 minute high to the long side, but then I just remembered that most of the time this setup fails. Sometimes it could work out, sometimes it could shoot back up, but that's so rare. And why am I trying to make money on something I see fails a lot of times? So I just decided to bail on it. Whether it works out, whether it doesn't, just let it do whatever it does. I'll be watching something else. Later, I saw it dropping down. You could see right here, it's dropping all the way to the 9 moving average on the 5-minute chart, which I love a lot. I saw a fake breakdown right there, which I also loved, and a new 1 minute high. Took it to the long side, and because I am inside the range right here, I put my stop loss at the low of the range. Survived the pullback right here. It continued consolidating, and look at this. What do we see right there? Do I regret not taking partials right here? Not really. It didn't even give me a 2 to 1 because I gave it so much room. as a stop loss. It was around 20 cents, I think, stop loss. So yeah, it didn't give me my risk to reward, and I just decided to hold on. I see it dropping down, but if this is an ABCD pattern, if it's strong, it will work out really well. I see where the candles are closing. Where the candles are closing, they held it in this area right here, they held it in this area right here. It's going up and it's dropping down, and if it's strong, after the breakout of the range, it should pull back to the previous resistance area, act as a support, and then bounce out of it. So that happening, took my partial at 2 to 1, and now look at this, what is happening right there. Stock is breaking view up, but I see a lot of selling pressure. Wicks on the upper side, wicks on the upper side, a reverse hammer on the top right there, and I knew that it's not really so strong. It finally broke this resistance. It broke this resistance so much, but each breakout is not so strong. It's just a little bit of breakout, and then it's getting a little bit heavy. So I took most of my position out right there and exit the rest for a bit of loser. I got some slippage right there because the drop was fast and it didn't get me out of at break even. But yeah, that was around 30 or 25% remaining, so that was totally fine right there. It actually continued dropping down, and let's see what happened right there. Another fake breakdown right there, held the 20 on the 5-minute chart, new high, and this one worked decently. Like, this one worked much better. If you get in at a 2060, put your stop loss 2040, you could have got around 5 hours trade right there, almost 5 hours trade. So yeah, this worked out better, much better than this move right there, but it's totally fine. Now let's see what Colton did there. Colton traded CCL. Now let's see. CCL, I saw it and I did believe that it could go to the upside. One reason I didn't take it to the long side, it just didn't meet my criteria. It had a lot of moving averages ahead, and I didn't know where it will go. I saw that at before the open, here we had a fake breakdown. Then before the open, it started making higher highs and higher lows, sort of a hammer, new high. At the open, it made a new 5-minute low or 15-minute low, and then it immediately got bought back up, closing as a hammer. And I wanted to take it to the long side, but again, didn't meet my criteria. Had a lot of moving averages above it, and I just simply decided to avoid it. But that was just me, because I mean, I have those rules, and I just try to go for the setups I'm having. At the open, I don't pay attention to, and that's smart, pellet fish, because at the open, stock has a lot of volume, and the first minutes they could just simply squeeze through all the moving averages to the upside, or squeeze below all the moving averages to the downside. But for me, it's not my style. I just try to avoid them. The pattern was still good, as we said. It was making higher highs and higher lows on the 15-minute chart. It tried to sell off, broke the level down there, but it immediately got bought back up. The only thing which prevented me from taking this thing is the moving averages, but you can't have all these signs in your favor all the time. So you took it to the long side at a new 1-minute high, which was smart. I personally would have put my stop loss not at the end of the week, but at the level right there. I'm never using the end of the weeks as my stop loss, just to tighten the risk and to get a much bigger reward. I think you had it even tighter than that, looking at where you started partialing, right? Yeah, definitely. I think you made it even tighter, which is not bad, because it actually started breaking the level right there. Took some partials right there, exited more at a new 1-minute low, which is smart. Then you are having sort of an ABCD pattern right there. I wouldn't have taken it to the long side right here, personally waiting at least for a new 1-minute high. Why is that? We're having a reverse hammer right there, a new low right there. It's below the moving averages. It could have just simply continued making lower lows and lower highs. We need to make sure that this is not happening right there. If you had some sort of confirmation on the level 2 or a price action starting to go faster on the time and sales, that's totally that could have been really good confirmation for you. If not, I personally prefer waiting for a new 1-minute high, just to be on the safe side, better than getting chopped out the first time and then catching the next move. Because if you catch the right move, you will get, let's say, 2 hours. if you get chopped out one time before getting the 2 Rs, you will be up 1 R only, which is not bad. You're still up, but we don't want to have some unnecessary losers there. So you get into the long side, putting your stop loss below the wick, I believe. I personally wouldn't have used the body right here because it still was within the range, it still was within the lower low and lower high. And then partial closer to the high of the day. That was just a little bit of too much partialing, right? It just broke the high of the day, which is fine. The 5-minute chart, 5-minute open range break out right there. I personally would have taken at the break, maybe I would have taken some closer to this moving average, and then as long as it's going up, I would just see what it's going to do. You're having this right here, previous day close, which is a really good place to take partial at. Doji, another doji, another doji, which is simply a good sign to just bail most of your position out, just in case. Why is that? Because now it's starting to form a parabolic reversal, and I think after this huge move right there, you don't want to just let it go back down 63 cents, just to make sure that it's going to bounce off the 9 moving average and continue in your favor, right? That's just too much profit you would give away. So it's starting to form parabolic reversal. Just exit most of your position out at $19. You could take a new position if you want, or if you are trading this setup. If not, and you prefer trend trading, wait for it to go to the 9 on the 5-minute chart and see what it's going to do right there. Did it bounce out of there, or did it form a W shape to take it for a trend continuation, or it will actually start making lower highs and change the trend, and then you would be watching it for short play. Perfect. Good job. So Ram, let's see what you did right there. You traded NPH. Did you average up? You shorted it, it continued going against you, and then you shorted it one more time and you took partial at view up right there. I think that was some averaging, right? Not sure if Ramlal is here, but look at these guys. First of all, I mean, an entry right here would have been good to take it to the short side. It's extended from the 9 moving average in the 5-minute chart. You're having a double top right there, fake breakout right here, and then a new 1-minute low. Not a bad place to take it to the short side. Now it's starting to make higher highs and higher lows. It's breaking the bodies. The trend has changed. I know you try to get in at a pullback, but I personally wouldn't have taken it right here, because this signal right here is sometime my signal or my exception to exit at break even. So it wasn't the perfect entry to take it to the short side. Then it continued going to the upside and you didn't bail on it. Remember guys, not to do this thing at all. Just it's my advice. If it's your style, you can keep it, but I strongly not recommend doing this because you don't know how far the stock is going to go. Let's just take a look at NPH yesterday, because NPH yesterday, it was so weak and it formed some parabolic reversals which looked so good, but they never worked out. Look at this drop right there from 54 all the way to 38. You never know how the market is going to move right there, right? And let's take a look at the 2-minute chart yesterday, or the 1-minute chart yesterday. Let me actually do it this way so that the candles are not so small. Look at this, a doji making a new high, then it's making a new low and dropping down. You try to average, for example, after the hammer and after the fake breakdown, and it starts to drop down again. Again a hammer after holding a little bit right there. You try to take it to the long side and it just simply continues sinking off right there. Here it did work out, but this was a bad setup for me. I personally don't take these type of parabolic reversals. Why is that? 2 wicks on the tops which are showing me selling pressure. I don't like that, and I would have missed this move, and I am totally fine that I missed it yesterday. But look at this, what's happening after that? It's dropping down again. This is around 12 something right there. It's starting to get extended right here, right? You could see that here it was so tight. Now right there it's starting to get extended around 80 or 90 cents from the 9 moving average on the 5-minute chart. Same thing, hammers making new highs and it's simply dropping down. Dojis, new highs, and it's just simply dropping down, right? Climactic volume, which is really good to see on parabolic reversals. Higher low right here, new high, simply dropping down, right? You don't know, I mean, not all the stocks are making those good parabolic reversals or those pullbacks. Sometimes they work out, and sometimes they just keep sinking all the way to the low of the day. And this is what, this is NPH, the same stock which yesterday was simply sinking down. You don't know if today for some reason it will be simply going up, right? So you don't want to do this. Just exit for a small loss, 1 hour, right? Because if you add right here and it goes against you, it will be 4 or 5 or 6 hours and you will regret not bailing in right there. And look at this trade here, it worked amazingly well. You're taking it to the short side right here, putting your stop loss above the bodies or above the wicks somewhere right there, and this is your risk right here. This is your reward. I see that you're holding so well, Ramlan. This is really good. It's good how much you're holding into this trade, and this is at least 3 or 4 hours. Accept the 1 hour loss and make 4 hours, and you will be up 3 hours still, right? Which is really good. It's better than regretting this in the future, because this time it worked and I'm happy that it worked. Next time it could just simply cost you a lot. You could just simply lose a lot on those averaging, and you will wipe up weeks and weeks of profits right there. Would you have taken Abhishek? We did talk about it. I personally don't think I would have taken it at 942 because it doesn't meet my criteria, but it wasn't bad because it was an ABCD pattern. So let's see what else we had there. Let's see your CCL trade, Ramlan. You have taken the same trade I've taken right there, but I think I've taken it a little bit later, right? Let's see. I don't remember where I have taken it actually now. It's because of the background. I took it after the head and shoulders pattern was completed. So look at these guys, CCL. First of all, we're having a strong resistance moving average right here at 935. You're having 3 dojis on the 15-minute chart, right? It can't just simply go higher anymore. It was going up, it pulled back, continued going up, broke the high of the day, but what is here? This is a fake breakout. This is so weak, right? It can't even make it above the high of the day, and it keeps closing within the range right there. So we're having shoulder, we're having a head, you're having the clearly drawn neckline right there. You take it to the short side right here. I personally wouldn't have rushed it to take it to the short side right there. Why is that? Because it could just simply make a W shape and actually break up. I want to just make sure that the pattern is going to be complete. I wouldn't take it to the long side here, and I wouldn't take it to the short side right here. Just want to make sure that the pattern is fully complete, right? But still, it wasn't bad. I mean, it was more weak. You saw this fake breakout right there. You had a new 15-minute low. You had a doji at the half of the day, which is totally fine and good. You take it to the short side, and I love how much you're holding, Ramlal. You are really good at holding. I might be jealous right there because on some of the trades I'm watching, you're holding even much better than I do. Let me share my CGC trade here. Let's get it smaller there. Let's get this smaller there. We'll get it back to today, and this will be today as well. It's not CGC actually, I traded CCL, sorry, and it was CCL also there. Now, let's see right here, CCL. I'll get it back here. I'll get it back on the 2-minute chart. So let's go from bigger time frames, right? On the daily chart, what do we have? Closed yesterday here. Today it gapped down. So from the daily, I'm usually biased with the direction of the gap, and I love taking reversals with the direction of the gap. If the stock gaps down but intraday it's strong and then it forms a reversal pattern, I love taking it to the short side for a big move. If the stock is gapping up and intraday it's selling off and then starts forming a reversal pattern, I love taking that reversals for a strong move to the upside. Okay, if the stock is gapping down and intraday it's selling off and then it forms a reversal pattern, I'm not really keen into taking these type of reversals for a strong move, for a full reversal. I just take them for a scalp. Now we have a gap down, the stock was strong, forming a reversal to the downside. I love taking these type of patterns to the short side for a big move. On the 15-minute chart, clearly a strong stock right there, strong moving average, 200 moving average, 3 dojis at the high of the day, big selling pressure right there. That's really good to see on the 15-minute chart. On the 5-minute chart, you could see shoulder, head, shoulder, right? It tried to make a new high, which failed and started dropping down. So we're having a complete and full head and shoulder setup to take it to the short side. 2-minute chart, same thing. Shoulder, head, shoulder, and there was a doji right there. And to be honest, this was a perfect entry. This was a perfect entry, and I was a little bit late into this one on the 2-minute chart. 1-minute chart is where I decided to put my stop loss at. So I see that it's dropping down. It made a head and shoulders there. It's starting to make lower high wave, lower high wave, lower high wave, and a lower high wave. I took it to the short side once it started going down. Took it to the short side, put my stop loss right there. Now this is really tight, to be honest. This is a bad stop loss. The best stop loss would have been at least above those bodies right here at 19.25. Stop loss at 19, let's say, I don't know, 10 for example, and having a 15-cent stop loss. This was the perfect stop loss. I tightened it so much, and I was really nervous when I took it to the short side, because this consolidation right here, it could have just simply got me stopped out right here. I'm sorry about this guy noise right here, guys. They're not coming for me, I swear. So they should be gone soon. Okay, they're leaving. Maybe. Anyway, so this is a really tight stop loss. I shouldn't have taken it right here. No, not now, Zen. Maybe after an hour, after we're done with the trade review. So yeah, this was really tight. It could have just simply got me stopped out, formed a lower high wave, and then worked in my favor. And that would have been so sad. I would have just simply lost 1 hour or maybe a little bit more with slippage, and then I would have caught it because the pattern wouldn't have failed. So don't take an example from me here. Bad stop loss, better stop loss right there. Now, since this is a gap down, since we are having a head and shoulders on the 1-minute chart, on the 5-minute chart, on the 15-minute chart, it's a reversal, there is no need to take quick partials at the daily levels or moving averages. We broke the neckline. This is a full reversal. I'm taking the partial first at view up, then I'm taking it at this daily level. Why did I take it at this daily level? It wasn't because I have a daily level right here. It was because we're having a pivot point right here, a closed pivot point. You could just simply go to this pivot point, respect it, bounce off it, and then continue going higher. So I just decided to take one right there to be safe. After that, my next partial right here. Why did I take this partial? I took this partial because you see that the daily level, it held it one time, second time, and we're having a double hammers right there, making a strong move right there. So I don't like that, and I decided to take a bigger partial right there. After that, a partial at 1850, which is the round number, and I see that it's actually holding the 1850. It's getting into a support area on the 5-minute chart, the 200 moving average. This is the 200-day moving average right there. It's holding it, and I just decided to bail the rest of my position out on this one. Could have continued holding it, but I see that after the breakdown, after it broke this area, it was only 8 cents move. This is not a strong move after a breakout, right? I would love to see bigger move after breakouts. Pull back and a move. That's what I want to see. If it's making just small move after breakout, this is not really strong. I pay attention to small to 1-minute candles. For my confirmations, I see a hammer at the low of the day with an increasing volume. I see another hammer holding it right there, a new high. If I wasn't in this position, I might have considered taking it to the long side there. Since I'm short, this is a good signal for me to just bail on the trade right there. Yes, and I'll make sure to tell them, to ask them to call you in case they get me, and I hope they never do. I don't really love police stations. Not that I've been in there. I mean, I've been there, but not for a crime. And why am I even saying that? Yeah, let's just continue doing this. So let's see what we have there. This is a trade for Lou right there. Lou traded AAL, and what did you do there, Lou? So you tried to take it to the short side. Now this is something I would have been careful about. And guys, why wouldn't we take it to the short side right here? Just look at the patterns at all the time frames. It wasn't bad, but still, indecision, heavy wicking still, and higher low wave. That's good. I think this is the wrong picture. Oops. It's fine, it's fine. Let's take a look at this. We'll take a look at your other trade as well. Just look at this. You see that it's respecting this moving average right here once, which is fine, right? Then you are seeing that it's respecting this moving average 3 times right there with buying pressure, and it's getting into the phase of this moving average one more time. I like that it's making lower high waves on the 1 minute chart, but it's also making a higher low waves on the 1 minute chart from the bottom side, right? So it's starting to form sort of a pennant. At this stage right here, this pennant is still having wide range, right? It's still not closed, it's still not tight. So if it's breaking to the upside or to the downside within this pennant right here, it's still not good because the range is still so tight right here. You want the pennant to get tighter and tighter and tighter in range, which sometimes happens, sometimes doesn't happen. Then we see a breakout. If you are so aggressive, you could take it at the break of the pennant, and if you want a safer move, which is smarter, you wait for it to break, you wait for it to pull back, either hold the area of the breakout or just make a higher low wave before you take it to the long side. If you do that, you see that it's breaking up, but then it's just immediately getting back into the range. It's just a little bit choppy. However, on the 1 minute chart, we are having a double top right there. On the 5 minute chart, you're having a doji at the top right there. Okay, strong move with no pullback. So right here, this wouldn't have been a bad entry to take to the short side. First of all, you are getting to the short side as close as possible to the resistance, which will make your reward small. You are getting into a setup, which is a double top right there, a double top right there, and a doji at the high of the day. So yeah, this would have been really good because you're getting as close as possible to the resistance. This is not really good because you're getting as close as possible to the support, to the short side, and the resistance is way far right there. I see that you use the high of the previous wave as stop loss, but still, right? This is not the best risk to reward. This is your risk, and the support is so close. You want to get in between this area right here if you want to get into the short side, but you want to get in as close as possible to the resistance to have a huge move down there to the support. Yeah, but still, this is a good thing, and the stop loss was really good. I love your stop loss. You didn't tighten it because you went in between the range. You had a really good stop loss right there. You got stopped out, you respected your loss, which is also something to be proud of. Yes, exactly. It's clear right here that it's holding this moving average, but still, good job on this one. You got in on a new low, you put your technical stop loss, you had your risk to reward management. I think you wouldn't have partials at the lows right there. You would have definitely held at least 2 view up down there. One thing I didn't pay attention to, just look at these guys. It's just now I'm noticing it. It's sitting right at the pivot point right here. Right, you see it? So the previous resistance area right here, it went to the upside, it pulled back into the previous pivot point, which is another thing to be careful about. You don't want to short into pivot points. This is something I didn't pay attention to, but it's also there. Try to pay attention to those pivot points, and once it's breaking those pivot points, it could just simply continue going lower to the next pivot point. Breaking the next pivot point, those pivot points, they're good for taking partials or profits or look for bounces off. You'll have the next one right here, so just try to trade out of them. If it's breaking this pivot point but it's not making it all the way down to this one and start making higher low waves right here, this is showing you that this is not so weak right there. So you want to upload this one. Let's see this one right here. Now this was perfect, you see? The first one you took, it didn't work out, but you still believed your plan, right? And this is what we were talking about. This is exactly it. You're having a double top right there, you're having a doji right there, and you are taking it to the short side on the next candle. This was perfect. You're taking it to the short side, your stop loss is somewhere up there. Never using the wicks, you could use simply the badges right here, or give it a little bit room above the wick just to tighten it by a couple of cents, and then you're taking a partial at the 50 moving average, which is the previous pivot point. This is really smart. you are taking another partial after you are seeing bounces of the 50 moving average and it making a new 1 minute high. Another smart partial right there. Another partial at view up, which is also good. It can't break below view up, starting holding it. I would personally not partial right here. I would take a partial or exit all out if it breaks the 50 moving average. Why is that? Because I have that rule that the stock, if it's strong reversal, first of all, it's dropping down, right? We can't expect it to simply sink down with lower lows and lower highs. We could just simply expect it to make something like this, something like a reverse ABCD pattern. And this C on reversals is usually the 50 moving average on the 1 minute chart. So as long as it's still holding below the 50 moving average on the 1 minute chart, I wouldn't really be aggressive about it. This is a good partial. If you had a huge position left, this wouldn't be a bad partial right here. This wasn't really necessary, but still it's fine. I love that you held on to this pullback, went all the way down to the next pivot point right there, which is another smart partial right there. So you managed this one really good. You see, this was a perfect trade right here. Good job on this one. And you made your loss back, right? You accepted the loss, was a fine loss with 1 R, but then you got a really good move right there, which made all your losses back and even more there, right? Perfect. So let's see what Ken did. Kairos, make sure to send it to the off-topic chat so that I don't miss it, and I will get back to it so close or so soon. It's totally fine. It's just that sometimes I forget about them here and I could mess up the orders. So let's see what Ken did. Ken traded beyond, and look at this. This is an ABCD pattern I usually try to avoid. And anyone who is watching our trade reviews a lot could really figure out why I wouldn't take this ABCD pattern right here. So guys, why was this a little bit late and at the same time early entry? Why wasn't it the perfect entry right here? This entry is perfect. I love it. Overextended low, then after a big move. Exactly, that's it. So you see, the stock already did a huge move right there, from 155 all the way to 165 with no pullbacks, right? On the 5-minute chart, it's so extended of the 9-moving average in the 5-minute chart. Sometimes it's working if you're taking a stock for an ABCD pattern when it's extended from the 9-moving average in the 5-minute chart. Sometimes it does work. But what I am seeing that when the stock is extended from the 9 and the 5, it usually pulls back to it. And it's good for parabolic reversal. Since I'm trading parabolic reversals and my percentage win rate on parabolic reversal is good, it simply shows that the ABCD pattern, when it's so extended, right there, will have a really low win rate. So instead of chasing a stock, I started shorting it all the way to the 9-moving average on the 5-minute chart. This way, I could take it to the short side all the way to the 9, and if it's respecting the 9 and it's making my ABCD pattern, I could take it also to the long side right there. Now, this was so extended. Yes, that's a pullback on the 1-minute chart. Yes, it's at a breakout and it's breaking the high of the day, but the problem here is that we don't know how far it's going to go after the breakout. It could break out, it could work out a little bit, and then it could just simply drop down. It's already extended. We don't know how much it's going to move after it breaks out, if it breaks out, right? So yeah, this was really late. Now look what's happening right there. It's dropping down all the way to the 9-moving average on the 5-minute chart. Now it's getting interesting. It's holding the 9-moving average on the 5-minute chart. It's closing as a doji, but after a parabolic drop or after a huge drop like that, I prefer waiting for a W shape. Earlier on the day, that W shape is on the 1-minute chart. Later on the day is on the 5-minute chart. And you see that it's making sort of a W shape above the 9-moving average in the 5-minute chart. On the 1-minute chart and on a new 1-minute high, you are taking it to the long side. My stop loss in this case is the low of the second wave right there. If it's at the break and if it was making slowly nice moves to the upside all the way to the breakout area and then it's breaking out, my stop loss would be a new 1-minute low. But in this case, since the candles are really huge, I would put it at the low of the second wave, taking an entry right there, and then I would just simply go for a 2 to 1. You see that this move right here is, again, it's parabolic. It's not stable trend. I don't love when the stocks are trending like that. Why is that? It's tough to control the risk on this one, or to manage your partials. It's getting just straight up. It's getting so extended from the 9 and the 5. It's making a doji at the high of the day, above the high of the day, and then it's making a new 5-minute low. You can't just simply hold on to this trend and hope that it will bounce off the 9 and the 5. I see that it did, but you can't really hope it will do that right there, because this is a huge profit you will be giving, right? This is why I don't love when a stock is going like this. If it's going something like this and trending like this, I would be holding on to it. I would be holding all the way, all at 5-minute highs and higher lows until it gets parabolic and makes a new low. That would be perfect. Exit. This is a good way to manage the trade, or at least I'll be taking small partials right there on the way up. On these kind of moves, you don't know how much is going to go, and you are forced to take some partials on the way up, because you can't even wait for a new 1-minute low. Each new 1-minute low is around $2, and that's too much to just wait for it to go against you. Then I think you took it to the short side here. Was this is short, or you simply took last partial here and then it dropped a lot and you had a hotkey mistake? I'm not sure if Ken is here, but look, if this was a short, I'll be totally fine with it. This was a really good short, extended from the 9 and the 5, and you're having a confirmation candle on the 5-minute chart. You're not having, you have it on the 1-minute chart, but when you have it on the 5-minute chart, this is even a better confirmation right there. So you take it to the short side, you partial closer to the 9 and the 5, and that's it. But I see that he said he responded in the off topic. Sorry, I actually thought that the off topic, the first trade was FOMO. That's totally fine. And then it's hotkey mistake. That's good. And I love this partial. This was a really smart partial or exit, especially if you got most of your position out right there. Then here, I guess you wanted to exit at break even the rest, or maybe your stop loss was triggered after you took this partial and you were short a little bit of your position by mistake, so you covered it. But yeah, it's good. I mean, this setup was really fine. I love it, and I personally, I'm not sure if I would have taken it, but I think I might have, because everything was there. I just don't like the 1-minute candles, but it's totally fine. It's really good. This one was a little bit FOMO, as you mentioned, but good job managing this one. I love how you managed it. Let's see what you did here on ENPH. You traded ENPH to the long side, and this was yesterday. Yesterday was really tough, and this is really good. I love that you exited this one. So you're having a parabolic drop right there. It is so extended from the 9-moving average in the 5-minute chart. And look at this, no new 1-minute high, no new 1-minute high, all the way down. Then it's making a doji. You're taking it to the long side. I personally wouldn't have held it to my original stop loss. Why is that? There are multiple reasons. You're having a double top, right? Sort of an M shape right there. You're having a new 1-minute low, and you're having sort of a descending triangle. Once I see that forming right there, I would just simply bail on it a little bit earlier, because this enough for me of a sign that I should bail on the trade when I see it bouncing of the 9 and the 1. I'm not always bailing when it's bouncing on the 9 and the 1, but here it was so weak, it bounced of the 9 and the 1. If I held on to it, like maximum here, I would have bailed, but still this was a good trade. I love it. It was a decent one. You had a doji at the low of the day, you had it extended from the 9 and the 5, you entered at a new 1-minute high, and you respected your stop loss. That was a really good thing you did right there. How can we avoid trading parabolic reversal on it? Personally, you can't. It was a good setup. It lacks the daily level right here to make it an A+ setup. This is the first thing. It lacks a climactic volume, but you could see increasing volume at the low of the day, but still it lacks climactic volume. It's not A+ setup, but it's a good setup. We just simply failed. This was a decent setup there. Pilot fish, I see that it's also a lot of time that it's bouncing of the 9 and the 5 1-minute chart, and then it's making a double bottom, and it works out. And I usually am not willing to get myself chopped in these kind of trades, so I take it to the long side. Then I see it's bouncing of the 9-moving average in the 1-minute chart, and I exit for a small loss, and I flip my position to the short side. Then it's forming a double bottom setup, and it's going to the upside, and I exit on the I exit the second time in a few minutes right there. This way I'll just simply get stopped out 2 times on one winning trade right there. So I try to do most of the times the same thing Ken did right here. I enter into a position, it either works out or it's either loser. It's better to have one loser on a trade and then wait for the second opportunity on some other stock, rather than getting stopped out 2 times on one stock and then be 1 step away from my max loss for the day. You could do that, it could work out sometimes, but you need a really weak stock for this to work well on it. Exactly, Ken, and this is why we are having max loss for the day, right? And I was watching NPH yesterday. To be honest, I took it twice yesterday, and I lost 2 times on NPH. Then I just stopped trading parabolic reversals on it because I saw 2 perfect opportunities. The 2 of them failed, and sometimes we are just simply watching the wrong stock for the right setup. So NPH was really weak yesterday. Each parabolic reversal which formed on this one really failed, and that's why we're having the max loss for the day. If you're losing 1 more time on a good setup, 1 time on a good setup, it's fine. You're losing 2 times, it's decent. 3 times, you're getting to your max loss for the day. Just call it a day. Don't try to catch that reversal 5, 6, 7, 8 times and then be down 8 hours for the day, which is your 2 or maybe 3 day max loss, right? Just accept the small loss or move on watching something else. Pilot fish, let's see what you did there. You're welcome. So pilot fish, you traded BA and you tried to get into a reversal on this thing. Chase breakout into yesterday close on volume. So you tried to get into the long side and you got subbed out. And yeah, I wouldn't have taken this. I wouldn't even have taken this breakout right here. Why is that? This is so parabolic. It's forming an ABCD pattern when it is so extended from the 9 on the 5-minute chart. If even I take it at the breakout or take it somewhere right there, my stop loss is far. I'm having a daily level right there, and I'm not sure how much it's going to go after it breaks out. If it goes to the daily level, that's actually good, but it could just simply not reach it. So that was the first mistake. I think I personally don't love taking breakouts. There is actually different type of breakouts, right? Not everything breaking the high of the day means that this is a breakout setup. The way it's breaking out is really important. If it's simply going up and making a small pullback and then it's breaking up at the high of the day, this is not a good setup for the break of the high of the day. It's going up, pulling back, and then it's starting to form a descending and ascending triangle for the break of the high of the day, and we had JD set up for that, I think yesterday or before yesterday, and someone in our community actually traded it, but I'm horrible at remembering stuff. Anyway, this is a good breakout setup. This is a chase right here, because this is not a perfect breakout setup right there, so it's fine. Let's see what you did after that. You tried to take it to the short side and you got stopped out because the stop was really tight, and yes, it was really tight. At least give it a few cents above the highs right there. The reason I wouldn't have taken this thing to the short side right here is this: it's so close to the 9-moving average on the 5-minute chart, and if I put my stop loss a little bit above the wicks, I will not have a 2-to-1, right? It will be maximum 1-to-1 move. So yeah, if you catch it somewhere right there for a parabolic reversal with a good confirmation candle, this is really good. You will have a small stop loss and you'll have really good risk to reward, which you will eventually get. But getting it to the short side right here, this is a really bad risk to reward, so I would just simply avoid it. Those entries right here are much better. Why is that? You are getting in closer to the resistance area with a really tight stop loss, and your reward is really huge, which is the 9-moving average on the 5-minute chart. It also started to get toppy right there. You see that it started to get heavy, it's starting to get toppy. So yeah, these shorts right here, they were fine, and it eventually worked out. But even if those shorts failed right here, at least they were good, right? You are not chasing in for a breakout, you are not getting into the short side closer to the support and so far from the resistance. Here you are getting in closer to the resistance, to the short side, and you have the next pivot point as a reward if you want. You waited for more, and I love how much you held, which definitely made you make all your losses back there. Look at the volume. Oh, I see that volume. This right here at the high of the day, it was definitely higher, which is a good sign. exhausting volume. I would definitely love to see double of that. I would actually love to see a 1 minute chart in this one. Unfortunately, it's not there because it's easier to determine where is the climactic volume part on the 1 minute chart, because this is crazy volume right here. If it was something like this, and then on a 1 minute chart at the half of the day you're having a spiking volume right there, this is actually a good sign of a reversal going to happen. But yeah, I like what you did right there, so good job. Then we're having Lou. Let's see what Lou did. Lou, yeah, this is some chop right there, right? I mean, this entry wasn't bad. You are getting in for a 1 minute open range breakout after a hammer, and if you guys remember what we reviewed right there, it actually first broke the low of the level, the low of a level we had in pre-market, and then it squeezed back up, forming a good 1 minute open range breakout, which is good. You took it to the long side, you took your partial, and that was it, right? Right here, I wouldn't take it to the long side because it's starting to chop in a range. It's not ready yet. This is not a pullback, right? Then it's dropping down. I'm not sure what you did right there. I think this was a short and a stop out, or it was a long. This was some independent trade right there. This was a long and you partial, and then you took it one more time to the long side right here. I personally wouldn't have taken it to the long side right there. It's still making lower lows and lower highs on the 1 minute chart. You need to get in after confirmations, and it's better to wait for a new highs. Similar to this. This was a decent entry. At least you got in after a hammer on a new high, and then you took some partials, which is good. This right here, I wouldn't have taken it not to the short side and not to the long side. Why not to the long side? Because we were having it extended from the 9 and the 5. We were getting into a daily level. We're getting those selling pressure wicks on the top, and then we're having a new 1 minute low, which is forming a parabolic reversal right there. So right here, it's late to the short side because your best stop loss is there. You can't put your stop loss within a big 1 minute candle. It could just make a move all the way to the half candle and then drop down, and that's what happened right here. It made a move all the way to the half candle, which got you stopped out. Then you revenge traded it because it actually started working out, right? This is why I hate getting into the short side after big candles. It could make a move all the way to the middle, and sometimes even more than that. So it cost you 1 hour, got you stopped out literally to the penny, and I know how bad that feels. You saw that though you have 2 selling pressure wicks and you're taken to the short side, but this is already late. It already did a huge move to the short side. So this is a chase. Then you are getting stopped out right there. And one more time, you are taking it to the short side a little bit late. You're having a huge move right there. You're having a fake breakout, shooting star at the half of the day after a fake breakout. A good entry is a new 1 minute low. When the stock is uptrending, you don't want to get to the short side when it's already made a huge move to the downside. Why is that? Because you're not sure if this is a pullback or this is a reversal. If the stock is so strong and we're trying to go on a short on these type of stocks, then we're trying to make money on the pullback, not aim for a full reversal. You can't expect that it's going to reverse all the way from here all the way to VWAP, because it's, you see the waves, right? It's going to the upside, and it could just simply continue going to the upside, which it slowly did. If you want to make money on the pullbacks, try to get in as on the first new 1 minute low, as close as possible to the resistance, so that you can take some partials closer to the 9 and the 5 or somewhere around that. This short, same thing, right? You can't go to the short side as long as it still didn't give you any confirmation. Here you're taking it to the short side, but you're taking it to the short side on the way up. Still no confirmation right there. And it's actually breaking the high of the day. If you see, I think you put your stop loss at the previous day close because you didn't get stopped out. I see that you are respecting your losses, stop losses, which is smart. And I get right here, you didn't hold it against your loser. Or maybe this was partial from the long, right? See that? And you see, there are a lot of small unnecessary setups. I think what I see right here is that you are having a little bit of fear of missing out. You want to be in the move, and that's a problem. Just try to be in the right move. If you see a setup, get in there. If it's going to move without you and without a setup, then just let it go. Okay, don't force it, don't chase it. Just let the stock do whatever it does and have your setup to trade. Kairos, last trade we're having right here. AMD, same thing we talked about. Stock is extended from the 9 to 5. It already did the move. You want to be in early, right? you want to be in after the, like here it wouldn't have been so bad. You're having sort of a W shape right there. Here the 5-minute chart is ugly definitely, but at least here an entry wouldn't have been bad and here an entry wouldn't have been bad. You try to get in as close as possible to the support. When it's already so late, this is already a chase, right? This is already did most of the move. You can't expect it, especially with this big of stop loss, you can't expect it to make a double of this move on a stock like AMD. So yeah, this was late. Then you are taking it to the long side on the way down, right? Lower high, lower high, lower high on the way down, and you are trying to take it to the long side after selling pressure wick right there. Just be patient, wait for the setup. If you see it, then that's good. If not, then just try to avoid it. If you miss the entry, then let it go and catch the next move right there. So yeah, that's it for today, guys. We are 5 minutes late. If you have still any trades and we couldn't go through, just feel free to email me and I will take a look at them. If you have any questions, you can feel free to email me and I'm always happy to answer, guys, on YouTube. Thank you for being here. Same thing, trade safe and have a good day, everyone.